This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Stormy September, stocks surged on this first trading day of September, but then reversed course as two top Republican lawmakers voiced their support for limited strikes on Syria. We have the latest from Washington, plus what it means for your investments.
A shot in the mobile arm. Microsoft buys Nokia device business to make it a major player in the phone industry. But is it enough to give Apple and Google a run for their money?
And banking on fees. Want to bank the old-fashioned way with a teller? It might cost you, but are consumers willing to pay for a service that was once for free? We have all that and more tonight on Nightly Business Report for Tuesday, September 3rd. Good evening and welcome, everyone. I'm Susie Garrett. Great to have you on the show, Sue.
It's great to be with you, Susie. I'm Sue Herrera, in for Tyler Matheson. He's on vacation. The long holiday weekend is over, and it's back to work on Wall Street for what promises to be a September to remember. This month, traders are preparing for a possible tapering of stimulus plans from the Federal Reserve, a battle over the debt ceiling, and the search for a new chairman at the central bank. And now, of course, the crisis in Syria. Today, traders were able to put all of that aside, sending stocks higher, focusing instead on some major corporate acquisitions and encouraging manufacturing and construction spending data. But a triple-digit gain in the Dow evaporated after top Republican leaders pledged support for President Obama's plans for a military strike against Syria, sending a chill down the concrete canyons of lower Manhattan. In the end, the major averages were able to hold on to some modest gains, with the Dow up 23 points, the Nasdaq up 22, and the S&P added 6.
The debate over whether the U.S. should take action against Syria over its alleged use of chemical weapons shifted to the halls of Congress today. At a Senate Foreign Relations hearing, the Secretaries of State and Defense laid out their reasons to authorize military force. Eamon Javers joins us now from Washington on the latest efforts by the Obama administration to garner enough support from Congress. So, Eamon, tell us all about it. What happened at the hearing, and how much support do you think the president already has for his military plans?
Well, the entire day today was really a full-court political press for military strikes in Syria. The Obama administration beginning the day at the White House with a briefing for lawyers and for leaders, rather, and a meeting with the President of the United States. At that meeting, the president said he himself has already made up his mind, but he's going to reach out to Congress nonetheless. Take a listen.
I've made a decision that America should take action, but I also believe that we will be much more effective, we will be stronger if we take action together as one nation.
Now, the president got much of what he wanted coming out of that meeting, including the Speaker of the House, John Boehner, who said that he's throwing his support behind the president's position on Syria.
I'm going to support the president's call for action. I believe my colleagues should support this call for action. We have enemies around the world that need to understand that we're not going to tolerate this type of behavior.
And then later in the day, as you say, John Kerry, the Secretary of State, is testifying before his old committee, the committee that he used to be the chair of up on Capitol Hill, Foreign Relations. There, his remarks were interrupted by some protesters who showed up saying that they don't want to see war in Syria. Kerry responded, however, by saying that he himself had once been a protester. Take a listen.
I had feelings very similar to that protester. And I would just say that is exactly why it is so important that we are all here having this debate, talking about these things before the country, and that the Congress itself will act representing the American people. And I think we all can respect those who have a different point of view.
So, Sue, some clear momentum today in Washington for military strikes, but definitely some skepticism as Secretary Kerry and Secretary Hagel testified before senators up on Capitol Hill. So some questions still unanswered up on Capitol Hill, and the time frame here remains up in the air, Sue.
Yeah, exactly. That is kind of the question. What does happen next, Eamon, and what is the timeline? Do we have any idea?
Well, Senator Menendez, who chairs the Foreign Affairs Committee up on Capitol Hill, said that they could vote as early as tomorrow, potentially, on a resolution to authorize the use of force. But that would be just in the Senate side. Unclear whether that could happen just as quickly over in the House of Representatives.
So, Eamon, you've been talking a lot about the conversation in Washington. What about world reaction? I mean, what have you been hearing about the reaction from other heads of state? And how might their opinions sway President Obama when they all meet with him in Russia later this week? As you know, it's the G20 summit meeting.
That's right. And the president is leaving tonight for that meeting. So he had the meeting in Washington with political leaders here. He's going to talk to world leaders tomorrow and throughout the rest of the week. And that was one of the big questions that was on the mind of senators up on Capitol Hill today. They said, if this is such a must do, if this is such a moral outrage, where's the rest of the world? Where are the other supporters of our actions here? The Secretary Kerry really put in a tough spot on a couple occasions by trying to justify a lack, really, of a broad and diverse coalition of support here.
Indeed. Eamon Javers. Eamon, thank you.
You bet.
To corporate news now. Microsoft is making a big bet on the future of cell phones amid tough competition from Apple and Google. The software giant is paying $7.2 billion for the Finnish handset maker Nokia, along with a long list of technology patents. Nokia already uses the Windows operating system in most of its phones, so it looks like a good fit. But Microsoft was the biggest decliner in the Dow today, with many investors feeling it may be too little, too late. With more on the deal and what Microsoft hopes to gain, here's John Fort.
It's been almost a year since Microsoft launched Windows 8, hoping to reinvigorate PC sales, gain ground in tablets, and maybe give a lift to its struggling business in phone software. It didn't work, and over the past 3 months, the company has announced a massive reorganization, the coming resignation of CEO Steve Ballmer, and now the planned acquisition of Nokia's phone business, along with access to key patents.
We feel that this transaction is very likely to close, and we expect the closing to happen during the first quarter of 2014.
It's not the priciest acquisition Microsoft has ever made, but it's without question the most disruptive. With Nokia's devices and services business, Microsoft expands its employee count by 32,000, about a third, bets big on hardware, and brings back a Microsoft veteran, Stephen Elop, who's suddenly the front runner to be the software giant's next CEO.
We know how to work together through our partnership. We're glad to have Stephen come to Microsoft, back to Microsoft. Much of the Nokia executive team, most of the Nokia executive team on devices and services will join us, and that will form the core of a variety of things that we're going to do in devices.
Elop made a controversial call 3 years ago to bet Nokia's future on Microsoft.
So being the player with Windows Phone in partnership with Microsoft to combat Samsung, to combat Apple, feels like a good place. Because if you take a look at the Android market right now and the other players in the Android market environment, it's a tough slog.
And it's sure to be a tough slog anyway. Apple's outselling Nokia smartphones about 6-1. But if this deal goes through before spring, as Microsoft hopes, it will at least have more firepower. For Nightly Business Report, I'm John Fort.
Investors were also talking today about that massive Verizon acquisition announced over the weekend. It's paying $130 billion to Britain's Vodafone to buy the 45% of their wireless joint venture that Verizon didn't already own. The news didn't go down very well with Verizon investors. Shares tumbled nearly 3%. But Verizon CEO Lowell McAdam told U.S. customers that they won't see any changes to their cell phone service and reassured wary investors that the deal will pay off in the long run.
Where can you buy a business that has 100 million loyal customers, that has 50% margins, that has no integration risk, and has a great field in front of it to grow the business even further? So we feel very good about where we've landed, and it's going to create a lot of shareholder value.
And another deal to tell you, this one of a slightly different kind. CBS and Time Warner Cable reached a new broadcasting rights agreement Monday, ending a month-long blackout of the network's shows in New York, Los Angeles, Dallas, and other big cities. CBS is being viewed as the big winner in the protracted fight, gaining a large increase in the fees that it will receive from Time Warner Cable. CBS rose on the news, up nearly 5% on the trading session. Time Warner Cable up almost 2%. So if content providers have the upper hand in this ever-changing media world, who are the long-term winners? We'll explore that part of the story a bit later in the program.
And here's a sweet-smelling takeover deal today. Consumer products giant Jarden, this is the company that owns a host of brands like Mr. Coffee, Crock-Pot, Rawlings baseball gloves, is buying Yankee Candle for $1.75 billion. Jarden CEO Martin Franklin says that adding the nation's largest maker of scented candles, along with hundreds of retail stores in the U.S. and Canada, is a good fit for the diversified company. Shares of Jarden soared more than 10%.
Joining us now to talk about all of the issues impacting the market is John Manley. He is Chief Equity Strategist at Wells Fargo Funds Management. Good to see you again, John.
Hi, good to see you.
All right, let's start first of all with all the headwinds that we talked about. You have the situation in Syria, you have the Fed tapering or not tapering as the case may be, and you have the economic data out there. What is top of mind for you as you put your capital to work these days?
Well, I think Syria is the short-term concern. I mean, we never really know what's going to happen, but it's made perfectly clear to us at times, and this is one of those times. So I think until we actually see some action one way or the other, the market's going to probably be a little trendless. But I think also beyond that is concerns about tapering, which has affected the bond market adversely. Again, I think this is just a phase we're going through, but those are the two things on top right now.
You know, John, from what we just heard from Eamon Javers on the timeline of this possible military action, it could coincide with the Federal Reserve meeting coming up in a few days. If that happens, how might that impact decision-making on tapering or not tapering, and just what investors should be doing?
Well, I think the way I read it, Chairman Bernanke will not taper if it has a negative impact on the economy, or perceives it to have a negative impact on the economy. So there's a whole mishmash of factors that go into this, and trying to read his mind is again, all but impossible. I tend to suspect that once it's done, once we've seen the strike, once we hear what the Fed's going to do, and I suspect it's nothing or taper light, I think that the market can move on. You know, fundamentals are improving underneath the surface, and at some point in time, they start to matter again.
So given that, where are you deploying capital? What areas do you like? Have you changed your year-end targets for the market at all?
No, the year-end target is about maybe where we are right now, maybe a little bit higher, but we set those back in October. The idea, we thought it would be a good year. It's been a good year. I don't see any reason to change that. The real big numbers for next year, we have a 2,000 target on the S&P for year-end 2014, which doesn't require a lot of dramatic input. Just get 4 or 5% earnings growth for the next year or so. Just put an average market multiple of 16 times for the last 35 years, and you're there. So I think, you know, I do think people should be buying stocks. I'd focus on 3 sectors. I'd focus on technology. It's actually the only double weight we have. It's great value. You're seeing acquisitions there. I think tech is still adding value. I like healthcare, and I also like the industrial side of the market.
You know, all of that makes sense, John, but what do you say to investors? And this is kind of an inflection point with all of these headwinds hanging over the markets. What should they do? Really sit tight and just wait and see what happens over the next couple of days, or jump ahead and make some moves?
You know, it depends where they're situated right now. I think it sounds sort of strange, but the next month or two, the market may not do very much of anything great or bad, but I think it's going to be a great buying opportunity. I still think fundamentals matter over the long run. I think these problems do get themselves resolved at some point in time. Valuations are good. The Fed's still going to be positive. I think people have to go somewhere at some point in time. I tend to think that just says take your time, pick your points, and buy the stocks or the funds you want to buy.
All right. On that note, we'll leave it there. Thanks, John. Good to see you again.
Thanks, Sue.
John Manley, Chief Equity Strategist at Wells Fargo Funds Management. A global economic recovery is not a sure thing. That's the rather gloomy outlook from the Organization for Economic Cooperation and Development, commonly known as the OECD. In its latest report, the group raised its forecast for growth in many developed markets, but said central banks need to continue their easy money stimulus policies to help weaker emerging markets and keep the global economy on track. The OECD actually lowered its growth projections for the U.S. from an earlier forecast of 1.9% down to 1.7% growth.
Well, at least the U.S. housing market got some good news today, along with a warning. CoreLogic, this is the real estate website, reports that home prices in July rose 12% from the same month a year ago. But it also said that the red-hot pace of growth in home prices may start to ease.
We begin today's market focus with a late-day mover. Shares of LinkedIn coming under pressure after the bell when the company announced it will offer up to $1 billion worth of shares in a public offering. The company says those proceeds will be used to strengthen its balance sheet and build up its international operations. In the regular session, the stock rose more than 2% to close at $246.13, but it fell after hours. H&R Block also fell after hours. That company reported a wider than expected loss for its fiscal first quarter. The tax service provider also said its plans to shed its banking operations will be delayed due to a regulatory holdup. And that pressured the stock late in the day after falling fractionally in the regular session to $27.88.
Also under pressure, Cytokinetics shares plunged today after the company's heart failure drug did not meet its main goal in a clinical trial. The company and its partner, Amgen, said the drug didn't work better than a placebo in treating shortness of breath in patients. Cytokinetics does not have any approved drugs, so the stock fell almost 27% to $7.65. Meanwhile, Amgen shares rose about 2% to $111 and change. Shares of Smithfield Foods rose today on word that activist hedge fund Starboard is trying to line up rival bidders to buy the company. The world's largest pork producer has agreed to be acquired by a large Chinese company. Starboard, which holds a 5.7% stake in the company, says it's working with investors, but a counterproposal has not yet been completed. A shareholder vote is scheduled for later this month. Smithfield rose about 0.5% to $33 and change. And shares of Coca-Cola fizzling out today. An analyst at CLSA cutting her rating on the stock to a sell and slashing her price target to $40 on concerns about declining sales and Coke's exposure to some emerging markets. The analyst also says Coke's current defense of the artificial sweetener aspartame could have an adverse effect on the company. Coca-Cola shares fell almost 1% to $37.90.
Well, the founder of another tech giant, Jeff Bezos of Amazon.com, is focusing his energy on a decidedly old-school technology. The new owner of the Washington Post newspaper is on the quest for what he calls a golden era at the daily paper, for which he recently paid $250 million. Bezos credits three big ideas that helped Amazon grow from a modest startup back in 1995 to an internet titan with $61 billion in sales last year. Number one, put the customer first. Number two, invent. And three, be patient. Bezos says that if you replace the word customer with the word reader, the Post will be a success too. Just ahead, want to bank the old-fashioned way? Well, if so, and you want to use a teller, it may cost you. We'll look at the latest fee to hit some consumers. But first, how commodities, treasuries, and currencies performed today. Kodak is back. The photography pioneer emerged from Chapter 11 bankruptcy today, coming back as a leaner, more focused company. After selling off its personal photography and document imaging units, the new Kodak bills itself as a commercial imaging company serving businesses in graphic design and packaging.
Ford is recalling 370,000 cars from the years 2005 through 2011. The reason to fix a steering shaft that could corrode and cause a loss of control of the car. The affected models, Ford Crown Victoria, the Mercury Grand Marquis, and the Lincoln Town Car.
Well, there's no recall yet over at Nissan, but U.S. safety regulators have opened an investigation into the Nissan Pathfinder and the Infiniti JX35 after complaints about a failure in some transmission cooler lines, which could cause the sudden loss of power in the transmission. If the probe leads to a formal recall, about 110,000 vehicles could be affected.
Buy or lease? This has been a toss-up question for many car buyers for years. But now a new survey shows that automakers are leasing new cars at a record-breaking rate. Experian Automotive says that nearly 28% of all new cars were leased, not bought, in the second quarter of this year. That's the most ever. Leasing has become more popular. That's thanks to more aggressive and attractive offers from car makers and tight-fisted buyers looking for the cheapest monthly payment on a new car or truck, especially now that the average sticker price has soared above $31,000.
And as for people buying a new car, another report shows that more and more of them are subprime borrowers. A separate report from Experian, the credit report company, says that banks made 36% of their new car loans last quarter to subprime customers, many of whom may not have qualified for a loan just a few years ago. The reason? Because loan delinquencies have fallen, allowing banks to extend credit to riskier clients, and automakers' finance units have been attracting more reliable auto loan customers.
With so many of those borrowers and other bank customers doing more business on their smartphones, the days of interacting with a teller at your neighborhood bank may be coming to an end, unless you're willing to pay for it. Kayla Tausche has more on a big push by some big banks to charge for the privilege of speaking with a teller.
Talk ain't cheap. That's news to some bank customers in search of a no-fee checking account. As deposits go digital and bill pay means point and click, some banks say talking to a real live person comes at a premium. Customers with a virtual wallet account at Pittsburgh-based PNC could be surprised in December when, 5 years after the account launched, a new monthly fee of $7 will be tacked on. To avoid it, keep a minimum balance, be a student, or do everything online. Only a few banks are experimenting with this approach, meaning customers, for now, have a choice.
I don't mind doing some things online, but sometimes it's better in person to discuss, issues or situations. I guess it depends if all the other banks were charging the same, I'd stick with mine. But if this was the only bank that was charging it, I probably would switch banks.
But Neil Weinberg, editor of the American Banker, says it's just one way banks are searching for revenue in an environment with low rates and heavy regulation.
The question for the banks is, what are consumers going to be willing to pay for? What are they going to think is enough of a premium service or creates enough new value for them that they're willing to actually pay money or to see fees deducted from their monthly statements? And that's the sort of experimentation that you're seeing now.
College sophomore Alex Lulakis says he'd sign up for any account since he never goes to a branch.
Maybe once or twice ever, actually. Ever. My mom has this weird iPad app so we can do everything online and at home.
For Lulakis, an e-banking account might fit the bill.
Sounds a lot easier than actually going to the bank. If I don't have to talk to someone, then, whatever.
Bank executives say e-accounts won't replace traditional accounts. They'll just be for a different type of customer, one like Lulakis that feels more comfortable doing everything online.
But not all banks are seeing enough customers take the bait. At Bank of America, only 10% of all new checking customers signed up for e-banking. The account, which carries an $8.95 charge for customers using the branch, was discontinued after only 3 years.
There's a tremendous amount of resistance among consumers to starting to pay for something that was previously free.
For Nightly Business Report, I'm Kayla Tausche.
And finally tonight, here's something you won't see too many chief executives do: share their annual bonus with staffers. All of them. But that's exactly what the CEO of Lenovo is doing with his $3.25 million bonus. He's going to split the money with some 10,000 fellow employees in China, along with employees in the U.S. and 19 other countries. All the workers will get about $300, including every hourly manufacturing worker. It's a nice thing to do.
This is the second year he's doing it. Somehow this idea hasn't spread to IBM or JP Morgan.
Not yet. We'll see. We'll see.
That's Nightly Business Report for tonight. I'm Susie Guerra. Thanks so much for watching.
And I'm Sue Herrera. Have a lovely evening, and we'll see you tomorrow.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Guerra with a Nightly Business Report news brief. A strong start to September on Wall Street mostly evaporated after top Republican leaders pledged support for President Obama's plans for a military strike against Syria. The Dow, up triple digits at one point, closed higher by only 23 points. The Nasdaq rose 22, the S&P added 6 points. Shares of Microsoft fell 4.5% after it announced a $7 billion deal to buy phone maker Nokia. U.S. manufacturing expanded by the fastest pace in 2 years in August, while construction spending was higher in July. Kodak has reemerged from bankruptcy, now focusing on graphics and imaging for businesses. And auto leasing hit a record high last quarter. 28% of all new cars were leased. Be sure to tune in to Nightly Business Report right here on your public television station.